Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. Today, we speak with Olle Lundin, CEO and co-founder of Froda, a fintech company founded in 2015 to make financing accessible for small businesses. Froda's platform uses digital onboarding and data-driven credit models to simplify lending, helping entrepreneurs secure fair, transparent loans without hidden fees or time-consuming processes. Since inception, Froda has issued more than 100,000 loans and today sports about 40,000 active SME clients across 7 European markets. With a fully automated lending platform and a growing network of distribution partners, Froda is expanding access to capital for businesses ranging from cafés and boutiques to professional service providers, ensuring that small businesses have the tools to grow. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Olle, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Thank you, RJ. Likewise. Pleasure talking to you.
So it's not always that we get a chance to speak with an entrepreneur from Europe, nonetheless from Sweden, and that we get to talk about fintech. So it's an interesting combination. For the benefit of our audience, maybe tell us about how you came up with this idea to provide financing to businesses in your region. Presumably it was an existing industry, or maybe there was a gap in the market. So maybe explain to us why you decided to pursue your idea.
So we're operating in a market with a product, that's essentially been around for ages in terms of providing financing. It's not a new phenomenon, so to speak, but me and my co-founders were at the time sitting in an incubator at the Stockholm School of Economics, which is a business school in Stockholm. And one of the things that we were curious about was the fact that all the companies that were there were spending the majority of the time trying to get access to capital, equity capital and debt. And we thought that, okay, what's the situation like for general businesses out there who lacks the background, the network, and perhaps the language skills and academics and so on, the way that those business owners, those entrepreneurs did? How does it work for them to get access to capital? And we realized that this is a huge problem for general businesses, not only in Sweden, but across Europe and across all over the world. That the vast majority of small business owners do not have access to external financing the way they should. So from that brief analysis, we thought, okay, if this is the case, why is that so? And what can we do to change that? And if we can change that, what would be the impact of society? And we came to realize that this is both an immense problem for the individual business owners, but also for society as a whole, because 99% of all businesses are small businesses. It's essentially less than 10 employees, and they represent the majority of the economic output in the society, and they represent about 3/4 to 4/5 of all employment opportunities. So we realized, okay, if we can provide better access to capital for these companies, it would have a great effect on society. So that is the problem that we set out to solve. It's now getting close to 10 years ago, and that's what we've been focusing solely on for the past decade now.
And I'm curious, in those early days, what were the types of businesses that were kind of falling within this gap in the market? Were they more traditional businesses? Did they have a tech component to them, or were they standard retail, consumer product, et cetera?
We started with this segment of the market, which is most difficult actually to finance. That is retail businesses, restaurants and stores and so on, because we realize that would be the fastest way for us to collect data and get enough data to transfer to statistical-based machine learning models for automated scoring purposes. Because our platform is fully automated, and in order to provide both a good user experience for our SME clients and to essentially reduce our origination costs to zero, we need to rely on automation fully. So we started with that segment and focused on that segment for the first 2 or 3 years. And then we'll be able to gather enough data to actually create scoring models, which allows us to expand across other segments. So now we provide financing to essentially all verticals, all segments, all types of small businesses.
When you're dealing with, say, a restaurant, so I'm curious as you were looking at your portfolio and how, maybe you were calculating those loss ratios, did you decide like, okay, we got to balance this out with other sectors because maybe there's a higher probability that we'll get successful companies for the long term that continue to grow and do well if we kind of diversify into these other areas?
I think that's pretty much why we started with the likes of restaurants, because we realized if we're able to provide financing and limit our losses, credit losses to that segment, it's not going to be a difficult step to provide financing to other types of businesses. So that really, when we could demonstrate that we can provide, we're profitable within 2 or 3 years of inception of the company. So we could very quickly demonstrate that the model was working. So from there, it was very easy for us to branch out to all other segments in the small business community. So that was a choice we made early on, that we needed to be really, really good at small businesses and the most difficult segments in terms of scoring. And that allowed us to, like I said, create a fully automated platform and then providing a great user experience and fair terms to all types of businesses.
So today, who's your typical client and what's the typical loan size and terms? Or is it equity as well?
It's strictly debt capital that we provide, so it's only loans. It's difficult to say exactly what the typical small business client is because there are so many different types. I think we issued in excess of 100,000 loans since we started the company, provided tens of thousands of clients with financing in pretty much any type of vertical. But they would take up a loan of about 20,000 euros or dollars to fund something in the business that requires working capital or make an investment in their business. That would be sort of the general need that we try to fulfill.
And previously, they would use their credit card?
They would either not do what they wanted to do because they didn't have the capital to do it. They would need to wait for a very long time in order to generate or retain earnings in order to make the investments that they like. Or they would go to the high street bank, talk to them for a few months, and then typically get a no, putting them back in a square one, so to speak. But how it works and what we've done in the past couple of years is that we have expanded a lot across Europe to new markets all over Europe. And we're doing that based on, I would say, a commercial and distribution model called embedded financing, which allows us to provide access to financing to SMEs through other enterprises. So that could be companies, could be banks, it could be traditional banks or neobanks, it could be payment companies or other fintechs and so on. But we'll be able to find new segments in new markets. That's where we branched out in the more recently.
And why is that model the one you chose versus going directly? I'm sure there's an obvious answer to this, but I don't know if you've considered both going direct as well as through partners, so to speak, in the countries.
I think essentially it's a matter of scale. We're able to, through the embedded platform, we're able to provide access to financing to the SME in an interface they're used to, that they're accustomed to. And also it really enriches data for us. So through proprietary data that we get through our partners, we're able to provide a more relevant product and obviously more accessible product. And also we'll be able to provide better terms to the client because our scoring performs better compared to using more traditional data sources.
So I'm not sure if you have like large grocery stores that sell to restaurants, say Costco in the US, right? Like if you partner up with them and then I guess presumably they have like a massive customer list where it's like all these restaurateurs go to them weekly to purchase. Is it that they don't have any of the technology to understand the creditworthiness of that borrower and the types of loans they should structure? So they don't have that in-house, which is why they would partner with Froda. Is that correct?
SME lending done properly is extremely tricky and complex. And there's a reason why even high street banks or traditional banks have been doing this for hundreds of years are not doing it to the extent that they should. It's simply really, really tricky. So for us, we've been sort of laser focused on solving this problem. So we've been able to build capabilities in a platform, expertise around SME lending, which is very, very difficult for someone else to build in a reasonable amount of time. And also it involves some credit risk and balance sheet issues, which is not perhaps the first choice of many companies out there. whereas for us, this is bread and butter.
Mm-hmm. So who owns the risk? Would it be Froda owning the risk?
Typically, it's shared. It's shared between Froda, our partner companies, that is the partner that we enter into agreements with based on the embedded platform. But it could also be public support vehicles like the European Investment Bank that see the value in us providing financing to SMEs. But it's typically a risk-sharing scheme.
How much of your credit analysis does any of it involve character-based lending?
No, it's all objectively database. It's a way to sort of democratize financing, if you will. So one of the problems that we realized when we looked into some more expert-based underwriting is that the people who meet the clients would have some sort of bias. May not be sort of ill will, but the effect would be a creative bias against, for instance, female entrepreneurs or people of a foreign origin or people that doesn't speak perhaps the language perfectly. So we have been able to sort of remove that entirely out of the equation and create models which perform 100% based on objective data.
Fantastic. Can you tell us a little bit about the scale of your organization has evolved over the years?
We're currently 100 employees at the company, so still relatively small, and we intend to not become too big in terms of employees because someone would have to take the cost at some point. But I would say the vast majority of those people are operating in a business developing or technology or product developing manner, which is basically forward looking in order to position the company for future growth. That is the focus of 80 to 90 people at the company. There's very little manual labor involved in actually originating loans, making checks and so on. Like the very important fact that we need to be fully automated in order to provide a great product with great margins.
Mm-hmm. And then in terms of the scale of your loan portfolio?
Yeah, we have about 14,000 active SME clients at the moment, growing rapidly for the past couple of years. And you find those across 7 markets in Europe. We're onboarding about 1 new partner per month, and we typically go into 1 new market every 3 months, every quarter.
And with the partner model, I guess they're incented because it is providing an added service to their client base, but is it also increasing their sales?
Could be both those reasons and other reasons, depending on the type of partner. For some partners, I think it's about providing a value-added service. It could be about reducing churn amongst the client base. It could be to increase your revenues by having a new revenue stream or improving your incremental margins. But for others, say like a traditional bank, it could be about providing essentially a product that is expected of you to provide as a bank or as a lender, but doing it a lot better than you'll be able to do yourself.
Mm-hmm. Do you see yourself expanding into the US?
Yeah, I think it's on the horizon because we're suddenly at a point in time where we see demand skyrocketing, I would say. So although that we're focusing on Europe and we have been focusing on Europe for the past couple of years, we realize that demand is equally high going to the west, to the US, in South America, Southeast Asia. So I think it's more likely than not that we would go into other continents in the next couple of years. The demand is simply too high, and we realize that the platform that we built is performing so well, regardless of sort of country or market.
Mm-hmm. And what other, say if you were to come to the US, what are the kind of sectors? Presumably you'd continue on with the restaurants and, retailers. Are there other sectors that you find really appealing?
I think the main sort of data point that we'd look at is where we can get the best type of data, where we can provide the most relevant product and get our models to perform at their best. But it also comes down a little bit to various distribution partners that we have. For instance, we have a great collaboration with Visa, which is obviously a US-based company that want to provide this product to their clients, be it banks, issuers, and acquirers, and so on. So that depends a little bit on sort of where we're heading from a strategic point of view, not only tactical.
Interesting. Well, we'd love to touch a little bit on your capital partners. If you could tell us about how you've gone about funding your own business.
Yeah. The founders, we're still sort of operational, and the team, the company, have a significant part still, retaining a lot of ownership in the company. And then we have a number of external investors who share, I'd say, two traits. One of them is that they have a very long-term view of what we're doing, and they see the importance of what we're doing, the good that we're doing. And secondly, they see the tremendous opportunity in terms of how this company can grow and increase its valuation over time. But we haven't taken up any VC funds, but rather well-known investors with a very long-term focus on their investments.
Excellent. I'd like to touch a little bit on you personally. I mean, it sounds like you founded this while you were in university. Is that correct?
I did an MBA at Stockholm School of Economics, which is a renowned business school at the time. But at that point in my work life, I had already worked for about 5 years or so as a business lawyer. So that's where I spent the first half of my career practicing business law. But I was sort of always gravitating towards business and entrepreneurship. So that sort of itch drove me to found new companies, start new companies. The first one I founded was together with a group of very gifted co-founders. It's currently named Adra. It's a growth agency that has grown tremendously over the past few years. That gave me a lot of sort of insights in how to build digital models and scale business through technology and so on. But the legal background, I think, provided some useful insights about regulatory framework, risk management, and so on. So those two aspects of my previous career helped me when we founded Froda.
And did you show signs of entrepreneurship as a kid?
I think I did. My dad was an entrepreneur, small business owner, started a couple of companies, small in scale. At one point, he even had you couldn't call it an airline because it was just one single plane, but it was he owned like a seaplane we would use to fly around people across this Stockholm archipelago. So entrepreneurship has always been part of my life, even when I was a youngster.
Excellent. We're coming up on time. I have two final questions. One is, can you tell us about a person who has had a profound influence on you?
I think one person, if we're sticking within sort of the Froda part of the chat, and the reason I think why Froda has demonstrated such growth and success over the years, I would say that our very first and most important investor was a Swede called Niklas Storåkers, who is very well known in the Nordics across Europe. And I think he's probably become a bit of a legend in the fintech investor space because has a fantastic knack in finding good companies and supporting them through the first years. He really helped us focus a lot on the core of what we do, why we exist, always sort of focusing on building a sustainable business that's going to generate not only growth and profitability, but doing that sustainably over a long period of time. So I think he has had an outsized importance for me personally and also for Froda as a company. So I'd advise you to reach out to him to see if he would like to have a chat on your podcast. I think it would be an entertaining chat.
Well, thank you for the suggestion. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Anything, I think, entrepreneur, small business related. But in these times, I think you get all these news about everything that's going wrong in the world. The conflict in Ukraine, all the people suffering there. You have the terrible conflict in Gaza. So any way you can help those people who are suffering there, I think is a great cause at this point in time.
Olle, I want to thank you again for taking the time to chat with us today. It's been a wonderful conversation.
Likewise, RJ. Take care.